Stocks perk up with advances outstripping the declines despite slowing GDP growth. Adani Group of stocks continue their rebound even as metals as well as realty rally and energy as well as FMCG bring up the rear.
Axis Bank acquires Citi's consumer business in India for Rs 11,600 crores with effect from March 1st. The move will bring 3 million Citi customers into the Axis fold.
Bajaj Auto reports a steep fall in the exports while the tractor maker Escorts reports a strong growth of over 27% in sales, says demand momentum to remain strong across geographies.
SEBI has barred 21 persons, including Axis AMC executives, involved in front-running stocks. The regulator also impounds Rs 30 crores of the ill-gotten gains.
Oil and gas majors have hiked LPG prices by a hefty near 20% or 350 rupees per 19 kg cylinder and a lesser near 5% for the 14.2 kg per cylinder. Now the move draws public criticism. Hello and welcome. You tuned into Business Lunch. I'm Nisha Podar and with me as always is my co-anchor Pavitra Parekh. So Pavitra, it's good to see green on the screen on a sustained basis.
Yeah.
And markets clearly snapping that losing streak that it was seeing, despite the macros being a concern, but looks like that there is some let up in the market. In fact, on a sustained basis, Nifty 50 is on the green side today, adding about 0.7% gain at the moment at 17,400 levels comfortably. Remember, it opened below the 17,400 level and has perked up. Bank Nifty is an outperformer and the mid-cap universe an outperformer by a huge margin, 1.3% up in trade. So there is a broad-based buying that is seen in the market. Advance decline ratio heavily in favor of the advances because of the mid-cap universe really participating with full gusto. Well, on my screen, there are most of the big boys like TCS, Axis Bank because of its Citi buyout, completion of that deal, as well as Reliance Industries, big boy. All of them are really helping the market. What's really not doing well today are the consumer side of companies like Britannia, HUL, Tata Consumer Products. They are not helping the market much today, Pavitra.
Oh, absolutely. But, just a few stocks which are in the red. So I think we'll take this with both hands. All sectoral indices in the green, metals leading the pack after all of these days. In fact, let's pull a few of the larger metal names up for you and you can see the kind of gains coming through in the mid-cap space as well. This is the sector which is really holding up today. A lot of the PSU bank stocks, so some of those will be up for you. And then you're seeing solid gains once more in tech, which had, taken a bit of a backseat in the past few days. So today you're seeing good gains in TCS, Tech Mahindra, HCL Tech. I'm just naming a few, but pretty much that entire space is doing well. Nisha's already mentioned Adani. So, all of those stocks also really helping. On the downside, in addition to consumption, it's few of the energy names. So do watch out for those. But all in all, this is a screen that we are very happy to get. And it is a good looking one at lunch hour. But let's kickstart the show now by talking about the individual stocks which are buzzing in trade. Axis Bank has completed the acquisition of Citibank's India consumer business. And Abhishek is joining us with the details. Abhishek, big deal and a good one.
Well, it's a good one and finally it gets completed. It was announced earlier and now is the completion that we are seeing. So they have completed the acquisition of Citibank's India consumer business. The transaction cost is a little over 11,600 crore. The earlier estimation was about 12,325 crore. So around 600-700 crore, a bit of saving over there. CCI or the Competition Commissioner of India had approved this transaction in July of 2022. So what is in store for Axis Bank? Around 30 lakh customers do get added to the bank. The card balance sheet can grow by an additional 25 lakh customers. This is the credit card portfolio, which is one of the best for Citibank. So branch expansion will aid in loan growth going ahead. Citi Wealth and Private Banking has an AUM of more than 1,10,000 crore, which gets added over here. And deposit accretion is pretty strong of more than 50,000 crores that we can see getting added to Axis Bank. Salary business of Axis Bank Bank will strengthen post the deal. And in terms of numbers, the proposed transaction or post this transaction, they'll have an additional 6.6% to the deposit base and about 11.2% addition to the CASA or the low-cost deposits that will get added, and about 3.7% is the loan accretion that they will have post this deal. Back to you.
All right. Thank you so much, Abhishek, for getting us all the details. And that saving is something that the market is really happy about. And Axis Bank stock really euphoric in trade today. Well, moving on, let's get you the latest from the Axis Mutual Fund front-running case now. And SEBI bars 21 individuals, including Viresh Joshi, the former chief trader at Axis Mutual Fund, from the securities market over alleged unlawful gains worth about 30.5 crore rupees from front-running, and also directs the 21 individuals to deposit the amount as penalty in an escrow account within 15 days. Now, SEBI has also imposed restrictions on debit transactions from the bank accounts of the 21 entities. In fact, Axis Mutual Fund has released a statement saying that the SEBI order has no findings or directions against the AMC and does not impact their operations. Further adds that they continue to cooperate with the regulatory authorities in this particular matter. An important one at that, and the clarification that is also sent by the company.
All right, this is important to track on the Axis Mutual Fund front-running case. But something more that we are getting news on is the latest in the Dish TV and Yes Bank case. CNBC-TV18 has accessed Dish TV Minority Investor Association's letter to Dish TV board. This was also sent to the exchanges, SEBI and creditors. So Ritu Singh is here with the details on this one. Ritu?
That's right, Pavitra. We've accessed this letter, which has been sent by Dish TV's minority shareholders to the board of Dish TV and also copied to SEBI, to the exchanges and various creditors and stakeholders, which alleges a serious breach in corporate governance by Dish TV. Now, this letter alleges that as on the 26th of December last year, Dish TV had received an approval from the Ministry of Information and Broadcasting, approving the names of 6 independent directors to its board. Now, the investor's letter alleges that Dish TV, there was a serious lapse in corporate governance by Dish TV because it failed to disclose this approval and this letter from the ministry to the exchanges. In addition, it alleged that they've also delayed the appointment of these directors to the board of Dish TV, and therefore they've sought immediate action. What they've said is, to protect the interests of minority shareholders, Dish TV must immediately convene a board meeting to appoint these directors on the board and must take responsibility for its actions. Now, we've been given to understand from our sources in Yes Bank that of the 4 names that Dish TV has proposed to be nominated on its board and sought a shareholder nod on the 3rd of March, convened an EGM to seek these approval, 2 of the names are not even approved by the Ministry of Information and Broadcasting. The other 2 names that Dish TV has proposed for shareholder approval are the names which feature on the ministry's list. However, none of the 3 names which were proposed by Yes Bank and also approved by the ministry feature on this. So that is one of the key grounds that remains, because remember, Yes Bank is a large shareholder, holds about 24% stake in Dish TV, and has been alleging these governance issues. And now we'll see on the 3rd of March what happens, whether Dish TV makes these additional disclosures or goes ahead with seeking the shareholders' nod for the 4 names that it has proposed.
All right, ongoing tussle at Dish TV. Thanks so much, Ritu, for getting us all the latest information on that. Let's now steer across to the auto sector. Remember, on 1st of every month, auto sales are the figures that we wait and watch out for. So the auto sales for the month of February have been a mixed bag so far. Well, Bajaj auto sales were below the estimates, while for Escorts, it has been a strong February. So Sonia Shenoy is right here with us with all the numbers as well as the insights. Tell us, Sonia.
Well, thanks a lot for that. You know, Maruti's numbers just came out a while back, and although the numbers are looking slightly better than what the street was estimating, the overall growth has slowed down to low single digits. It's less than a 5% growth on a year-on-year basis. That's because of the steep fall in exports. So it's not just a Bajaj auto issue. Maruti has seen a steep fall in their export numbers as well. The total export sales this time have come in at just 17,207 units versus 24,000 same time last year. The domestic piece is intact, so domestic sales have gone up in double digits, a little over 10%. But it's the fall in exports which is quite concerning. for Maruti. Now, the management says in their press release that the shortage of electronic components had a minor impact on the production of vehicles, and the company has taken all possible measures to minimize the impact. So that's on Maruti. But you know, this export piece is something that has hit Bajaj Auto as well. The February sales were lower than what the street was estimating because of the weakness in exports. Total sales fell 11% year-on-year, while the export sales were down a whopping 40%. Now, the company spoke to CNBC-TV18. They said that it will be a while before the export piece recovers, and the situation in Nigeria has not improved just yet because of the currency devaluation. That market is undergoing a lot of pressure, and Nigeria is the biggest export market for Bajaj Auto. Escorts, on the other hand, saw a strong growth in the month of February. Total sales went up almost 28% year-on-year. Domestic sales growth was good and the management commentary was positive. The management told CNBC-TV18 that retail demand across geographies remained very strong. Overall positive sentiment with the record Rabi sowing and better crop prices. Back to you.
All right, Sonia, thanks a lot for taking us through all of the details on how the auto sales have looked so far. This is for the month of February. But with that, we have to get into a short break now. On the other side, we're going to bring you excerpts from our conversation with the CEO of Capgemini from the NASSCOM Tech Conference. Stay tuned. Welcome back. You're still tuned into Business Lunch, and let's now put the spotlight on the IT space. Industry body NASSCOM says that 2022 was a year of steady growth of 11.4% in constant currency terms. They think that the domestic market witnessed strong growth, but travel and utilities haven't picked up quite as much as expected. NASSCOM further also estimates that the Indian tech industry will grow to $245 billion US. This is for FY23. So from the sidelines of the NASSCOM Tech Forum, Rima spoke with Ashwin Yadi, who's CEO of Capgemini, and began by asking him about the mood at the global headquarters as clients are getting a little bit more conservative. So let's listen in to that conversation.
For Capgemini, 2022 was the best year we've had, almost 22 billion euros in revenue. That was a 16.5% growth at constant currency, one of the highest, following 8 quarters of double-digit growth. If you look at our bookings, again a very strong number, and we delivered a very strong cash and profitability numbers. So in some way, the mood's actually very positive at the headquarters. We ended the year with a very strong momentum on bookings. At the same time, what we do see is there is some conservatism in the market. And that's how, we've sort of given a reasonable guidance looking at how we see Q1, Q2. So we've given a guidance of 4 to 7%. But we're reasonably bullish on the market, especially coming out of how we closed the year and what we have done in the market over the last 2 to 3 years in terms of our strategy, in terms of our focus on clients. I think the mood actually is quite optimistic and positive for 2023.
But if the mood is optimistic, can you explain your guidance for next year? If you have done 16.6% constant currency revenue growth last year, 4 to 7% growth doesn't appear to be reasonable. It appears to be subdued to the person sitting outside. Can you explain that? And also, what exactly do you mean when you say the clients are conservative?
So I would say 2 things. First, the reason, as I said again, is we do see there is a softness, and based on the industry, again, there are certain clients who are more actively or acutely impacted by the macroeconomics, and they are looking at how they would save costs, or they're revisiting some of their investments in technology. And a lot of people are uncertain. A lot of our clients are trying to gauge their industry, gauge the impact of all the macroeconomics, geopolitical situation. And hence they are cautious, and hence they also in wait and watch, and that's the sort of rationale behind the guidance. Is we just want to be sure clients would spend all the money which they have agreed to spend with us. Okay, there's nothing which says they won't, but we want to be sure and see how the quarter or how the H1 pans out. So that's the context.
On a blended basis, what are the tech budgets looking like right now? What is it that they've committed to you?
We won't share, the budgets committed to us are in our guidance, so one, they're reflected in our bookings. which is, we always report a certain period of bookings. We don't report the bookings for, more than 12 months. So we report it in a certain way. And then what the guidance is, the growth over 2022 base, which was a big base, yes, we see growth of 4 to 7%, and that's based on our, firm commitments we have.
All right, so that's important commentary coming in from NASSCOM Tech Summit. Let's move on to the energy prices front, and IOC in particular, along with other oil majors, is rising in trade because the prices of domestic and commercial LPG cylinders have been increased by oil marketing companies with effect from today. Now, this is, remember, the second biggest one-time hike in LPG prices that we have seen. And Sonal Bhutra, our colleague, is here with all the details of the implications, why this rise, and why an LPG second big rise right now, Sonal.
Well, Nisha, it is a big hike that has come through. As you pointed out, in the commercial segment, it's almost a hike of around 19.8%. It is a hike of 350 rupees per cylinder, now at 2,119 rupees per cylinder. In the retail segment, that's the one that we use in our homes, it has been hiked by 4.7% to 1,103 rupees per cylinder. It is the second biggest one-time hike that the commercial LPG prices have seen. Now, usually, how do we calculate LPG prices back home? It is a formula-based calculation that we do basis of import parity price. The import parity price is determined based on LPG prices which are currently in the export markets or the international markets, and on basis of that, the domestic prices are calculated, assuming that the fuel is actually imported into the country, and that's the pricing that we assume here. International LPG prices, how are they calculated? They move in tandem with the international crude prices. So basically, that's how domestic LPG prices are considered. They are usually changed every month, but this change has come in after many months that these prices have been revised, and they have been revised upwards. Now, why has it come in as a shocker? Because the major components of these LPG price hikes are the international crude oil prices, also the changes in rupee, if we see a major depreciation, so to say. The other ones are the insurance costs, freight costs, there are port charges, other costs which are calculated here, but both of them have not gone higher. Neither the rupee has depreciated nor the crude prices have gone higher. Despite that, this is a bigger hike. Gas prices globally have fallen as well. So this has come in as a bit of surprise and will definitely pinch the pockets of customers for sure.
Oh, absolutely. And there's widespread criticism that we're seeing, after this move as well across social media. But Sonal, thanks a lot for getting us all of the details. I also want to bring in an important weather update. The IMD has forecast a very hot summer coming ahead. The upcoming months from March to May will see above normal maximum temperatures across the northeast, east and central India. Heat waves during the next 3 months are actually highly likely in most parts of India, they think, except for the northeastern states, Jammu and Kashmir, as well as Uttarakhand and Himachal Pradesh, as well as Kerala and coastal Karnataka. So after warning of an early onset of summer, Nisha, they're also saying that it will likely be very severe.
Yes, the heat wave is considered to be very severe, and keep hydrating yourself is also the direction given by the government, the advisory that was put across. With that, we'll slip into a short breather on Business Lunch. But don't go anywhere, as we'll get you the latest on the two-day G20 foreign minister meeting in New Delhi after this very short break. You're watching Business Lunch, and markets looking stable, maintaining the status quo at lunch hour, it seems. Moving on then, the two-day G20 foreign ministers meeting is set to begin in a few hours from now in New Delhi. Now, the foreign ministers of Australia, Mauritius, Turkey, Russia and the UK, among other countries, have already arrived in India ahead of this event. Now, the ministers, along with India's External Affairs Minister S. Jaishankar, are slated to discuss and share their perspective on emerging challenges happening globally and also talk over international matters. However, reaching a common ground seems to be getting increasingly difficult, as UK Foreign Office issued a statement that they will continue to call out Russia's invasion of Ukraine.
All right, that is the latest on the G20 meet, which is later today. But with that, we also have to bring you some tragic news. At least 32 people have been killed and over 85 people injured after a train with 350 passengers on board collided with a freight train in northern Greece. Rescue operations are underway and close to 250 people have been evacuated from the site of the crash. According to authorities, the cause of the crash is not known yet. They also said that the head-on crash caused a fire in one of the carriages.
All right, so that was the last story from International Arena. With that, completely out of time on this edition of Business Lunch. But stay tuned to CNBC TV18. Midcap Radar comes up right next. Thank you so much.
Brought to you by Volkswagen Virtus, Sensodyne,